Over 90% of traders don't know what liquidity is or have a false understanding what it actually means. Using basic tools for market analysis very often leads to negative results. You draw trend lines and sketch a few magical triangles based on advice from someone on YouTube. You double check everything using MACD, RSI, but the position has a stop loss and results in a loss again and again. After a series of losses, beginners start to believe that market makers trading against them and targeting their stop losses. In reality, prices always move from one liquidity pool to another, because that's how market makers, large players and exchanges make money. Whether you make a profit on a trade depends entirely on choosing the correct price direction and understanding where liquidity is to predict if it is worth entering the trade or not. Hello everyone, my name is Dmitry Invest. In this video you will learn how to use liquidation map to enhance your trading results. You will learn to anticipate future price movements using the tools that I will give you right now. If you trade using basic technical analysis, you have likely noticed that sometimes the price doesn't bounce immediately from a strong level as expected, but instead goes beyond it before moving in the opposite direction. If the price gets very close to a pool, where is an interesting zone for collecting liquidity, especially liquidating highly leveraged position, it is very likely that the price will reach this zone. Let's take a look at some examples to see how the price behaves after liquidations occur. The price approaches an interesting level where it had previously bounced. This time it doesn't bounce. We observe one of the largest long position liquidations, causing the price to drop a bit lower. The reason for this movement is liquidity. But why do stop losses trigger in such places? Because 95% of traders place them there expecting a reversal from a strong level. I never open long position immediately. I wait for an increase in open interest and CVD. Without aggressive market buys, there won't be any growth. We waited to open a position and got a quick 9% of growth. So with leverage X10 is 90% of quick profit. As soon as open interest start to decline, we close the trade. Major liquidations often mark trend reversal points, but where can we see their accumulation? You can do this on the CoinGlass service. Open this website and here click liquidation map. Here we have the liquidation map for the BTC USDT pair. On the left are long liquidations, on the right are short liquidations. Each color of the bar represents the leverage. The taller the bar, the larger the volume of liquidations. After collecting liquidity in one pool, the price may start moving towards another pool. For example, on the chart it looks like this. The price accumulates long liquidations and drop to collect them. Then there was a sideways movement or a growth with the new liquidation accumulation. Traders may think that the price will continue its upward movement, but here we see another sharp movement with long position liquidations. Immediately after, there is a bounce and the short position liquidations. The price regularly moves from one liquidity pool to another. But it's not all that obvious, as a liquidation map on CoinGlass or other similar services is not exact data from major exchanges, but forecast based on previous price movements. Therefore, it is very important to use additional indicators in your trading strategy: open interest and the cumulative volume delta, CVD. For example, a decrease in open interest will confirm the closing of positions, and a decrease in CVD along with the start of price decline will be a signal confirming seller aggression after liquidity collection. I recommend watching separate videos about these indicators on my YouTube channel. Link will be in the description. Now let's take a look at a few examples. Coin Zeus. The price was in sideways for a while. There were no major liquidations and the market was accumulating them. Then we see a sharp increase in open interest, CVD and the price pump with the short position liquidations. Now we check three things. Number one, are there any more liquidations above? If not, it signals a high probability of a price reversal. Number two, we monitor CVD. If it drops, it means an aggressive seller has appeared. Number three, if open interest also drops, it signals traders are closing their positions. And then you can trade a coin according to the trend. The coin 1000 beer has been falling for a long time. I open the liquidation map and I see that on the left which means at the bottom of the chart there are no long position liquidations. And by the way, this is a 30-day time frame, and the older it is, the more accurate the signal. There are more major liquidations above, so the market will be interested in taking them, and soon we may see a bounce or a trend reversal. Later we see another sharp drop and the liquidation, and wait for an increase in open interest, the appearance of new position, an increase in the CVD, waiting for buyer aggression, and then I open a long position according to the trend and get over 100% of profit with a 10x leverage in a few hours. Few important rules for when not to open position despite on liquidations, rising or falling open interest, and the CVD. Number 1, when the price is not at key levels. The main problem for beginners is that they don't know how to wait for a really good trading opportunities. Open 1 hour or 4 hour time frame and assess whether the price is at its local minimum or maximum. Avoid opening positions in the sideways movement somewhere in the middle of the chart, as it's unclear where the price will go. Rule number 2, when trading situations are not obvious. Not all trading situations will be clear, especially when the market has equal clusters of long and short positions. In such cases, the market may remain sideways for an extended period to accumulate liquidity. And rule number 3, during liquidation events, there is a chance that the market will reverse soon. You cannot accurately predict where the price pump or dump will end. If you open a position against the trend too early, there is a chance that the market will liquidate your position as well. It's better to wait for a signal from the open interest and the CVD indicators, which will suggest a high probability of price reversal. And guys, don't forget to subscribe to our Telegram channel, where you can find a lot of useful information from the world of crypto and the trading. If you found this video useful, don't forget to like and comment below, and watch my other YouTube videos to enhance your trading skills and results. Dmitry Invest. See you later.